All right, let's talk about candlestick patterns. They're one of the first things we all learn, right? They promise to be the key to unlocking the market's secrets. But let's be real. They can be one of the most frustrating things ever. You know the drill. You see that perfect pattern, you get that rush of excitement, you jump into the trade, and then the market immediately turns against you. So, why does this keep happening?
Yeah, that's the million-dollar question, isn't it? The thing is, and this comes straight from the source material we're looking at from Wysetrade, it's not that the patterns are bad, it's that most of us are taught to use them completely wrong. And this leads to this painful cycle of getting your hopes up, getting confused, and, well, losing money. So let's really dig into the mechanics of this super common mistake.
Oh, you know this feeling, I know you do. A gorgeous-looking hammer candle shows up right at a major support level. You know, one of those spots on the chart where price is clearly bounced before. You're thinking, this is it. This is the one. You place your order, you put your stop loss right below the wick like you're supposed to, and then, bam! A massive candle just smashes right through your stop, takes you out of the trade, and then rockets up in the direction you predicted all along. That, my friend, is the candlestick trap.
And it's called a trap for a reason. It's almost perfectly designed to catch traders who are just a little too eager. It completely preys on this fundamental misunderstanding of what a candlestick pattern is really telling you.
So how does this trap work so well? Well, it's all about impulse. We see a pattern and our brain just screams go. We treat it like an automatic green light. We totally forget to look at the bigger picture and, this is the most important part, we don't wait to see if any real money's actually going to follow through. Think about it. Where does everyone put their stop loss? Right in the most obvious spot. That creates a giant pool of orders just sitting there, a perfect target. All it takes is one sharp move to trigger them all, and that's what creates that huge, scary candle that stops you out.
Okay, so if just jumping on a pattern is the problem, what's the solution? Well, it's all about changing how you see the market. It's about learning to trade with context. And honestly, this is probably the biggest difference between how most of us trade and how the pros do it.
And this quote from Wysetrade just nails it. They say, many traders will take trade entries solely based on what candlestick pattern forms, which results in low-quality trades. See, a pattern by itself is just noise. It's an interesting piece of data, maybe, but acting on only that hint is a recipe for really low-quality, low-probability trades.
And this right here is the big aha moment. A candlestick pattern is not an entry signal. It is not the market telling you to buy or sell. Think of it more like a clue in a detective story. It's the market whispering, hey, you might want to pay attention over here. A pro doesn't just find the clue and call the case closed. They ask, okay, why is this clue here, and what's going to happen next?
So this leads us to something super practical. We can actually break down this professional approach into a really simple 3-step framework. This is the system you can use to filter out all that noise and, finally avoid falling into that trap.
Here it is. It's just 3 steps. Step 1, find a key level. And we mean a real level, a major support or resistance zone where you can see the market has turned around before. Step 2, you spot your candlestick signal right at that level. That's your clue. But then comes step 3, the absolute game changer that almost everyone skips. You have to wait for confirmation.
So what the heck is confirmation? Well, think of it as proof. It's the market showing you that real buyers or sellers are actually stepping in. It's the follow-through. This could be a big, strong candle moving in your direction, or maybe price breaks a little mini trend line. It's the market tipping its hand, basically saying, okay, that signal you saw, yeah, that was for real.
The best way to really see how powerful this is to put the two approaches side by side. Let's imagine the exact same market setup and watch how an amateur trader and a pro trader handle it completely differently.
Okay, so first, the amateur. Their focus is laser sharp, but only on the pattern itself. They see the signal and boom, they're in. It's pure FOMO, fear of missing out. And what's the result? Well, they're the ones who set their stop loss in that big, obvious pool, and they end up becoming the fuel for the reversal. They get trapped, almost every time.
Now the pro, their focus is totally different. They're looking at the whole sequence, the level, then the signal, and then the confirmation. Their action isn't a frantic click, it's patience. They literally wait for the market to prove them right. And the outcome? They often enter after that fake out has already shaken everyone else out. They get in with the momentum on their side and can trade with way more confidence.
So look, if you're going to remember just one thing from all of this, let it be what's coming next.
We can take this entire professional strategy and shrink it down to just 3 words. This should be what you say to yourself every single time, before your finger even gets close to that mouse.
This is it. This is your new trading mantra. Level, signal, confirmation. Before any trade, you have to ask yourself 3 questions. 1. Is price at a key level? 2. Is there a good signal? And 3. Have I waited for confirmation? If you can't say a big yes to all 3 of those, then there's no trade. It really is that simple. Ultimately, what this framework really does is it draws a line in the sand. It separates impulse from patience. It's the difference between just reacting to what the market throws at you and strategically responding to it. So, I'll leave you with this question. The next time you see that perfect setup, which side of that line are you going to be on? Will it be impulse or will it be patience?